Welcome back to the Talking Hedge. I'm Josh Kincaid, and this is your Cannabis Business Podcast. Today, we're going to dive into another pitch deck. On the line with us to do that is Katrina Glogowski. She's a local attorney and angel investor. Thanks for being back on the podcast.
Morning, Josh. Thanks for having me.
So our 7 criteria for an engaging pitch deck. 1 is know the business plan goals. 2, know your audience. 3, understand the market. 4 is to identify needs and roadblocks. 5 is know what sets the business apart. 6, introduce the team and product. And 7 is create a summary. So today's deck is MotaWellness. It's a Missouri CBD company, I think. I guess we'll find out as we kind of go through.
Actually, Josh, it's a Missouri cannabis company.
I like that even better. The first slide immediately goes into what the market looks like. So they kind of talk about the Missouri market specifically, kind of showcasing that they understand the overall market as well as the specific area of Missouri, of which I have no idea. So this would be very helpful to understand some laws that were passed, some expected revenue. So not bad in terms of, understanding the market. This next slide talks about just an overall kind of idea about what they are. So MotaCann is a Missouri-based company. They've submitted applications for 2 cultivation licenses, 2 manufacturing, and 5 dispensary licenses with the intent of operating a vertically integrated cannabis company. So right off the bat, they tell us what their goals are, what they're doing.
So far, so good, Josh.
I like it. And Missouri is extremely attractive with favorable conditions and limited licensing. So that's really kind of good for investors. That's knowing your investor audience. Number 2, lets you know why this is good. They compare it to Arizona and Nevada, which we know are very lucrative areas. So that's nice.
This just goes to show they've done their research. I like the preparation.
I do too. They have a wide executive team on this next slide, and they have an amendment towards the very bottom that gives a background of each individual. So they don't clutter it within the deck, but if you want the additional information, you go to the very bottom. So right off the bat, boom, number 6, introduce the team, and down the bottom, they'll introduce the product as well. So that covers number 6 on our 7 tips to an engaging pitch deck.
And I think for viewers watching the podcast, this is a perfect example of how you should do it. There are names that an investor can Google, can LinkedIn and research, and it's not cluttered because all of the information is on the appendix deck way down at the very end. And if I have a specific question, I actually don't have to research to find it. Very good job on this deck. Introducing the team. This is an example of how to do it right.
The next slide goes into how they're going to achieve their goals. So that definitely goes with number 1, identify the plan's goals. It says that they're energy efficient design. They have utilizing low cost technology to scale, as well as a low location and expertise with experience, and providing differentiated products, providing quality cannabis, and implementing a strong marketing and sales plan. Kind of knocks that one out.
They've definitely met number 1. My only criticism is the slide is a little busy, but they have met the requirements of number 1 for the Talking Hedge tips.
Next slide is a timeline. So it should kind of give us some needs and roadblocks, as well as kind of what's going to set them apart within this timeline. I would say maybe that's my first, concern, is that it doesn't really have any roadblocks within this time frame.
I agree with you here, Josh. I understand that they are hopeful to get these licenses, but they don't actually have them yet. So number 1 should be, let's get the licenses.
So these next few slides are interesting. It goes into some of their facilities. It gives out a really nice state-of-the-art layout for the cultivation facility design. Tells you about the manufacturing process and what they would like to do, as well as a layout of the dispensary. And being vertically integrated, if you know what that means, is an opportunity. It's what's going to set you apart. It's going to be part of your strategy, but I'm not sure that they actually laid that out. This next slide goes into products, talks about some gummies, or actually just has a picture of a gummy, a picture of flour, a picture of a vape pen. And so you're supposed to kind of imagine that that's going to be sold in their own stores with their own brand. But I'm not sure what sets them apart.
I like that they have put this much detail in. They've gotten all the way down to packaging when they don't even have a facility. So this indicates good planning, but this does not indicate to me their differentiator. What's different between them and the other dispensaries in Missouri? But I like that they did it.
It's very well laid out. I think they paid a lot of money to have this done, but the individual who did it may not have had enough information uh, to note how it sets them apart.
Right.
So they have investment opportunities with Motacan Holdings. Talks about their seed capital that's already been completed with $1 million, and now they're in process with, looks like, a Series A between 18 and 25 million. 45% equity interest in a vertically integrated Motacan Holdings with 12% interest on investment until paid back, and retailing equity stake.
Josh, this is my first real criticism of this pitch deck, which is the actual investment opportunity to an angel investor. So basically, what they're going to do, what this slide means, is I'm going to give them money. They are going to put it in escrow and pay me 12% interest per year back on the money. And then once they go ahead and convert, they meet the minimums and they get the building going, then it converts to equity. And that is very, very expensive money for the company. Let's say I invest $100,000. I'm going to get 12% back, which is great. I love that. That's wonderful. But they're effectively paying 12% interest on a loan. And then when they're operational, it'll convert to equity. It's very expensive for the company to do the investment this way, especially when you're looking at $25 million. 12% interest on $25 million is very pricey.
1% per month is very pricey. I like this next slide that has a pro forma with the distribution. Talks about the investment, the monthly return, annual return, 15-year return, and the overall percentage of your return on investment. It says that after the initial 18 million capital investments paid back as a preferred monthly payback, the chart below shows that the approximate return at different levels of capital investment, the 15-year return, is extremely forward-looking and should be used for reference purposes only.
This is to help the investor understand in reality what they're proposing. They they are proposing to pay me 12% interest on my investment for 15 years. That is very, very expensive money.
So
Very
your $1 million investment after 15 years would get you $16,350,000 with 109% return on investment. It says not many industries can deliver that kind of return that the cannabis industry will over the next decade.
yeah, that's very forward looking, Josh.
Mhm. Yeah, the securities risk analyst in me is frightened because you're always told do not give any guarantees, and that's very forward, it's very direct, and kind of gives me, it makes me scared a little bit.
Yeah, I mean, there wasn't even an asterisk on some of those numbers. Further on down in the pitch deck, they talk about replicating this model in other states, and that's wonderful. That's great and good for them for forward thinking and realizing that the real potential in the United States cannabis market is multi-state operations. So good on them. But somebody's going to come in and really question the long-term efficacy of that payback schedule, of the payback schedule. It's just too aggressive payback. It doesn't enable future growth. If I invest $16 million and they're going to, I'm sorry, if I invest $1 million and they're going to pay me back $16 million, how are they going to fund growth into California? That's troublesome, Josh.
It's a great return for the first guy, and then after the 10th guy, the first one is going to start asking questions like, why are we still giving this high return back?
Right.
But they do lay out a pretty good cash flow diagram that comes from the concentrate market, or the wellness dispensaries, or the farms. I mean, again, this whole thing is pretty laid out, pretty well laid out. So the
Agreed.
next slide is bringing it all together. So I think this is number 7, creating a summary. We'll see if there's a call to action. But they talk about expansion and growth into existing facilities and brands with strategic development partners.
And then we get into the summaries and the appendix that goes on for an extensive amount of time. And I appreciate it as an investor. I get it. But it's just way too crowded of a pitch deck. And again, we really cannot stress enough, they don't have any licenses yet. They have spent a lot of money on architectural plans when they don't have a license yet. And that's good. That's good planning. They can hit the ground running once those licenses are issued, but they've also spent a lot of money without a license.
Right. This isn't Canada. They're not requiring, that you put all the money in first and then apply for the license. So, maybe do it first and then ask for some money. I would agree
Right.
that that's more normal here in the States. But let's give a recap of the 7 tips to an engaging pitch deck. Did they identify the business plan's goals?
Yes.
I would agree. Did they know the audience?
Yes, both the investor audience and the cannabis market. They spend a lot of time analyzing the cannabis market as well. Good job on that.
And I think this is maybe the first one that met the investor audience. Normally, we can kind of debate whether or not they know the general audience, but they definitely nailed both of them.
Right.
Number 3, understanding the market.
I think so.
I would agree. Number 4 is to identifying the needs and roadblocks. I think they missed the roadblocks. They put in what they needed to an extent, definitely not roadblocks. If anything, I'll give them half on that.
I agree. And we've already discussed they don't even have a license. That should be a roadblock. All of this should be conditional on granting of the licenses, and not just the grow license, not just the processing license, but also the dispensary license. They need to hit all 3 points in order for this business model to work.
I think they missed number 5, which is to know what sets the business apart. There wasn't anything about competition. They missed that mark.
Yeah, they are wholly putting all of their eggs in the vertical integration basket, which isn't guaranteed since they don't have the licenses, but that still, this isn't unique. There's everybody wants to be vertically integrated. So what? They did show us some of their products, some of their packaging, but again, there was no comparative data, no market analysis of why their brand is going to be competitive in the market.
They did kind of give us an idea of what the products and the idea with vertical integration was going to look like, and as well as introduce the team. So I'd give them number 6.
I agree. And they did it correctly.
Mm-hmm. Number 7 was to create a summary. They did that. They had a huge summary at the very end. Call to action. I think they did an okay job. I would give them number 7.
I like the summary. I like that this pitch deck is investor focused and gives the investor a lot of information that they need. And Josh, I would give them, 6.5 leaves.
So I think we're at 5.5. If we exclude number 5 and half of number 4, that's 5.5. So we'll round down, give them 3/4 of a leaf rating on this one. It's a good rating. 3/4 of a leaf it is with MotaWellness out of Missouri. Final question for you, Katrina Glogowski, attorney and investor. Would you invest as an angel investor in MotaWellness?
Not today.
Why?
I
Why not?
I would wait for their licensure.
Mm-hmm.
Right now, all of this is conditional on the licenses. And if you read the pitch deck itself, it says that Missouri will be only issuing a limited amount of licenses. And the risk to an investor to write a check today is, what if they don't get the licenses? Once they get the licenses, I would be much more interested. I like vertical integration. We've seen a lot of failures without vertical integration in Washington and in California. So I like it. They put a lot of effort into this. This is one of the better cannabis pitch decks I've seen,
Mm-hmm.
but there's still that great big asterisk you don't have the licenses.
Yeah, I really like the way that it's laid out. So if nothing else, find out who made it and hire them. Well, Katrina Glogowski, local attorney, angel investor. Appreciate you being on the podcast. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.